Hey, welcome back. I got an interesting trade I'm going to share with you. It's going to be in the NASDAQ 100. It's a stock breaking out. Even though right now there's been some shaking of the trees, there is a tech company out there breaking out to new highs. And as the market starts to rebound, look for this one to break out to new all-time highs. I'm going to give you those targets exactly and how to play it. My name is Joshua Belanger of Countervest. If you're on YouTube watching this, you know what to do. Hit the like button, hit the dislike if you like it, subscribe, leave a comment, and then head over to countervest.com, sign up for the emails for my watch list and other information that I share only through email because not everything is available on YouTube here. So if you're on the website as well and you're not on the email list, put your email in the inbox there and let's continue this and let's continue to make money. So we're going to take a look here at the VXN. The VXN is the SIBO product for the NASDAQ 100. That's why when people talk about the fear index, they talk about the S&P 500. That's the broad index. It's 500 stocks. But if you're going to talk about technology or the NASDAQ, you got to talk about the VXN. So just a product here. We're looking at a 190-minute chart here. That's why it's looking a little bit different. It's it's a 365 or 360-day plot on a 195-minute. So 195 candles, or 195-minute candle for each one of these, the plot. The reason why I'm doing that is because if you're swing trading, you want smaller time frames. If you're a passive investor, even daily movements doesn't really matter. You look at weekly and monthly. If you're a swing trader, you take smaller time frames. This is one of those time frames you look at. So why I'm looking at the VXN? Well, we just had a pullback in the market, right? Got a little bit of a shaking of the tree. Is this one it? It doesn't seem to be, but volatility is high. We have to keep that in mind if we're playing stocks or in general, just playing playing stocks. We need to know the expected range. If it's going to contract, if it's going to expand, how to understand volatility is important to creating success in the marketplace. So we're going to look at Netflix here. This is not one that sees, well, there was some positioning in some higher strikes. We'll look at those short-term expirations here in a second. But the interesting thing here is Netflix right now had a little bit of a box, consolidated a bit, and now it's breaking out. So if we took a smaller time frame, it broke out, pulled back, and now we're seeing that breakout. So I did say I was going to share with you some targets. My target here is the width of the box. Now, I'm not going to say that that this is the thing. I mean, when you're trading, when you're speculating, you create guidelines and bumpers, but no one knows. I mean, the best thing you do is try to create something as a pathway to look at levels. 650, and what I'm doing here is I'm taking that where that breakout happened with that width of the box. That's one, and then stacking in the next one onto it. So we could see prices continue to go higher here and continue to break out here. I know a lot of people would say, well, I want to wait for a pullback. Sometimes and oftentimes, stocks don't pull back. And when they do, you don't want to play those. There's a lot of stocks I can show you right now that pulled back. You want that? You want some Facebook right now? All right, so Netflix here. Netflix right now breaking out. So it has pushed into and out of that box here. First level is going to be 650. First price targeted on there. The next one's going to be about 690. Reason why 690, that level, 690, the 90 level, $5.90, whatever the 90, it usually is a resistance level. You'll hit into it, you'll hit underneath the whole number and kind of come back down. How does it happen? I don't know. It's just, it does. People see it, systems see it. I mean, let's not go down that rabbit hole. It just tends to be how that works. Again, nothing goes in a straight line, so let's just keep that in mind. We have to create, when things are going in levels in areas that we're not quite sure of, we just have to create a roadmap on how to manage that risk. This is all what we're doing. We get into a trade like this, we're looking at it and we're projecting, all right, I'm going to manage this risk here. This is the risk I'm managing at this point. But if I have profit, I've earned the right to take a gain. Where am I going to take that gain at? Well, these would be the levels. Just my opinion, not specific advice. So how to trade this? Well, one of the things that we saw some activity here is in the front week. I mean, we used to call them front month. I'm not quite sure if we call them front month anymore because we got so many weekly expirations here. But we did see some activity here with some positioning, with some buying coming in here. We saw the 650s active as well, and throughout the day it was up 31 points. So all this is going to be active here. Some interesting other interesting positioning here as well in this contract. See some opening, and we also see at the 700 strike here. So that's pretty interesting. You got someone coming in paying $1. I would have to look at the time and sales specifically, but for 10 days, they're putting $1 for a stock movement that is going to need to move up to $700, 700 and over $701 in 10 days. That probability, whoa, that's a 6% probability that it happens. So 95% chance it doesn't. Can't play that game. So anyways, what the way that I would play this here is we have some volatility that's elevated here. It is a $630 to $4 product. What do we do here? Sell some put spreads and buy some out of the money spreads. The reason why is because if we think, which is that speculation, that, my opinion, we push up there. Okay, well, we can look at the amount of bars that's taken, how long it's going to take. We kind of project that, so we want to go out and give ourselves enough time. We don't give ourselves too much time. That's the other art to this. You know, just to buy time doesn't really make sense. It's about maximizing the return. So we want to be strategic. If we think it's going to take 17 bars on that chart to hit our price target, well, then we want to get at least 17 bars for that trade to work. And the reason why we're speculating is because we're playing direction. Speculating, so I sell some puts, a put spread, because I just hate buying premium, and buy a call, sell something above it, out of the money, try to get that as cheap as possible to a zero cost. That's what I'm looking to position it. So there's different ways to do it. How you position it is, depending on your account. But really, it's just looking and speculating on that. That's the setup. How to trade it, there's many different ways to trade it. My two ways: sell a put spread, buy a spread. Make sure you have enough time on it here. If we just took a look here on the chart, I mean, we're talking about a couple weeks here, so I would have to count the bars here. I mean, you could look at something on a 30-day cycle to do it. If you're playing this intraday, obviously you don't need that much time. You just need it to move. So it's trading here, so you can trade something that has a lot more gamma and play it for that intraday trade. You don't need the extra time. But more, if you're looking for this as a kind of a multi-day, maybe a week to 2 week trade, that's what I have for you. I mean, Netflix, breaking out, money's going to rotate to it, and my projections, 650 and then 690. So we'll see you in the next video. Let's see how this plays out, and until then, good trading.